Aduro released its financials for the year ended May 31st, 2023. So their year does not end on December 31st calendar year. It ends on May 31st, 2023. Let's go over the balance sheet, income statement, cash flow statement, and talk about it. The first thing I want to talk about is the balance sheet, and the most important thing right now is the cash. So as of May 31st, they had 4 million of cash in the bank. The next thing that's important is the property, plant, and equipment. It went up significantly from last year. It was 450,000. Now it's 2.5 million. Why? Well, 2 R2s, right? And then the lab. So that goes into the property and equipment. On the liabilities side, they don't really have much liabilities. They don't have any debt. So the balance sheet is pretty strong right now with all the cash. If we go into the income statement, we can see that the company is starting to generate revenues. So in last year, obviously ended May 31st, generated almost 110,000. So that's mostly for running the tests, right, for companies. And then if we go into general administrative, share-based compensation, research and development, depreciation. So share-based compensation is a non-cash expense. So really what we care about is G&A for the burn and research and development, right? Depreciation and amortization are not cash expenses. So let's take a look at G&A. 2,114,207 divided by 12. So that's 176,000 of G&A per month. And then if we add research and development, 1,780,446 divided by 12, that's another 148. So let me add those two, 1,780,446 plus 2,114,207. That's about 3.9 million divided by 12. So 325 of expenses per month, right? And, some of it, a lot of it, research and development, is used for building the asset, right? R2s, lab. Some of it can be expensed. So let's keep that number in mind. 325,000. And then, so that 325,000, if we go back and look at the cash of 4 million. So 4 million divided by 325,000. That should be enough to cover a year worth of expenses on the income statement, right? But then in addition to this, we have Capex, because some of the expenses cannot be expensed. They have to be capitalized. So we have to go to the cash flow statement. Here's the cash flow statement. And we will go into property, plant, and equipment. So in last year, it was 2 million. So 2,005,914 divided by 12. So Capex was 167,000 per month. Right? So the 325,000 per month is enough to be covered by cash. And now Capex, where is that money going to come from? Because we're still going to have a little bit more of the work done on R2s in Q1 and Q2. And then the lab will be finished in September. And then those expenses for those R2 will be significantly reduced. But then we will have Capex for R3. But as you know, to raise that cash, the company did some private placements. But in addition, there's warrants that are being exercised. So let me go to that section. Before I talk about the warrants, here's the more of a breakdown of the revenues. As the company in an early stage business, it has limited history of operations and as expected, has not generated significant revenue. The revenues of 51,000 and 109. So 109 was for the whole year. 51 was for the last 3 months. Related to revenue following the completion of services pursuant to a collaboration agreement with a confidential publicly traded organization. So that's the major oil company. That's the revenues coming from that. Here is how the revenues were broken down into the 3-month periods. So there is one 3-month period, and then there is another 3-month period. Now here it talks about the liquidity. So where did the money come from other than from the private placements? During the year ended May 2023, the company generated 2.9 million from capital raised from exercise of 2.4 million warrants at 50 cents, 1.7 million warrants at 80 cents, and 68 or almost 69,000 warrants at 30 cents, and the exercise of 109 warrants, and the exercise of 300,000 warrants at 65. So warrants, when they are in the money, they are a source of funds. And then this is a very important table here, because if the 4 million that they have in the bank is enough to cover the 325,000 on the income statement per month, then we need more money for the Capex. And also, they will need, probably from January to the end of 2024, they're building R3, and they will need between 5 to 7 million to do R3. But that money, where is it going to come from? Well, it can come from some partnerships, some grants, but also, if you look at the summary of outstanding warrants, here you have 1.5 million warrants, 2.8 million warrants. Those are exercise price of 50 cents. The stock is over $1, so they're going to get exercised. And then all of these warrants, 2.2 million, almost a million here, 114,000, 38, 1.3 million, all of those are at $1. So they're also likely to get exercised. So let me add from here to here how much this will bring to the company. So by exercising all these, the company will receive 6.8 million. So 6.8 million plus the 4 that has in the bank, we're talking about $11 million. That's a very strong. That's a very strong, balance sheet. So now, if you ever wonder why does the company spend money on like investor relations, getting the awareness out there, well, because you want those warrants to be exercised, right? And those warrants will only be exercised if the stock price is high enough to be exercised, right? So next time you ask about these things, think about that. So yeah, so that's about it on the financials. 4 million in the bank. Revenues are starting to get generated. One source of revenues from the major publicly traded company. Warrants are already getting exercised. Additional warrants that are in the money, that's another 6.8 million for the total between the cash, about 11 million. So they have enough in the bank to cover the expenses on the income statement for about 12 months. The money from the warrant exercises should be well enough to get them a lot of the expenses covered for R3 in 2024. And I'm sure there will be some, grants, partnerships, and things like that. But that's all I have for now.